Good evening, everyone. My name is Greg Smerdell, and I am a Director of Resource for Real Estate Investors, and I'll be your host tonight. And today's topic deals with buying real estate within your IRA, 401k, or other retirement accounts. And our key speaker for tonight is George Fernandez. Little background information on George. He's a graduate from Case Western Reserve University right here in Cleveland, and he's worked in the financial, accounting, and real estate fields for over 27 years.
Thank you, Greg. I am very pleased to be here this evening. And you are right. It's a topic that only few professionals and even less investors know about, the self-directed IRA.
Plain and simple, what is a self-directed IRA?
Greg, a self-directed IRA is legally no different from any other IRA. The term self-directed simply indicates that you choose your IRA's investments and you don't limit yourself to the packaged products available at traditional IRA custodians. You see, most brokerage houses and banks that offer self-directed IRAs limit clients to the scope of their own investment products. In other words, they merely offer you the products that they happen to sell.
Now, what can a self-directed IRA invest in?
Greg, the rules only specify where you cannot invest. Therefore, there is virtually an unlimited array of possible investments. The IRS only defines the following assets as excluded. One would be life insurance products, such as a life insurance policy on the life of the IRA owner. Another would be collectibles. The third would be capital stock in an S corporation.
Well, the big question is can I buy real estate using my IRA?
Yes, absolutely you can. You can buy real estate within your IRA, your Roth IRA, your SEP IRA, and Solo K retirement accounts. Additionally, you may be able to use your other retirement plans like a 401k or 403b to fund a self-directed IRA or Solo K in order to buy real estate. Imagine not being confined to investing your hard-earned cash in the volatile stock market or the low-interest rate CDs. You can actually diversify your retirement money in many, many creative ways.
All right, George, clear something up for me. If I take money out of an IRA to buy real estate, don't I have to pay taxes?
You don't take funds out of your IRA. You buy real estate just like you would buy a stock or a mutual fund within your IRA. Buying real estate is just a purchase of a different type of investment.
Okay. Well, tell me, how do I buy real estate then with the IRA?
We work with you in finding a property that you would like as an investment. When you have decided on the property, you make an offer and purchase it. During this whole process, you have the pros at Cleveland Restoration Group to assist you. And you also have our network of strategic partners that can assist you in any phase of the process. So instead of simply buying mutual funds or stocks, you can now have real estate as an investment and truly diversify your portfolio.
All right, George, well, what type of return on investment can I expect from a real estate investment?
You know, Greg, there are no guaranteed returns, and there is risk involved in any type of investment. But generally, we don't present a real estate opportunity unless it projects at least a 9% return per year.
Are smaller investments possible?
Absolutely. There are several ways to invest in larger projects with a relatively small investment. The easiest way is to join forces with other investors, friends, or family, and own property through an LLC or a TIC. Your IRA can also borrow money to purchase real estate. So each situation should be evaluated carefully to determine the best strategy.
Okay, George, I'm interested. What's the first step?
The first step is always education, Greg. You could begin by reading the information we've posted on our website. If you decide to explore further, you can contact us for an initial consultation. From there, we'll help you determine what the best strategy is for your situation.
Now, George, why should I take money out of the stock market and put it into real estate?
Okay, we're not suggesting that you take all of your money out of the market. In fact, you can continue to invest in the same types of investments like you have in the past. You can invest in things like CDs, mutual funds, stocks, bonds, and so forth. And you can work with the same financial plan that you're comfortable with. What we're simply advocating is a diversification of assets. Not just multiple types of mutual fund ownership, but diversification into investments that are not directly correlated to the ups and downs of the stock market. Take a look at the 30-year time period at the bottom. You see that the property index shows a total return of 9.73% for the 30-year period. There are some significant negative returns in the various stock market indices. Consider the 1, 3, and 5-year periods. The average stock market returns have been negative. Not so with the real estate index. So more importantly, what this chart shows is that although the stock markets have returned on average about the same as real estate, it has done so with much more volatility, and that's not good. As you can see, there have been years of significant losses, but real estate, because the returns are heavily weighted with net income from rents, are all in the green. They had positive total returns through the end of 2008.
Where are the best locations for somebody to want to invest in real estate?
Well, Northeast Ohio, of course. I mean, Greg, you might think of a little bias here, but I don't think so. I believe that the real estate market in Cleveland holds a tremendous opportunity for investors wanting to buy properties. As you can see from the chart, appreciation in the Cleveland market has been good throughout the years. Since 1990, we've had an appreciation rate that's averaged over 7% per year. We haven't had the crazy appreciation rates you've seen in some markets like California, but then again, we haven't experienced the collapse in prices either. However, like in any other market, there's also an up and down cycle. Greg, do you want to buy when prices are near the top or when prices are near the bottom?
Well, of course I want to buy low and sell high.
Yeah, we all do. Well, it just so happens that if you want to buy low and ride the cycle upwards, it's a great time to invest in Cleveland real estate. We happen to be at the bottom of the cycle. So achieving these higher appreciation rates, as shown on the charts, over the next few years should be easy to do.
Do you have any properties you can illustrate for us?
Here's an analysis of a property on East 73rd Street in Cleveland. This property has been totally rehabbed and has a tenant with a 12-month lease. If we look at the income, $600 per month for a single-family home is quite reasonable. Although we have a 12-month lease on a single-family home with an excellent tenant, we are still being conservative in calculating vacancy losses of 8%. Now, looking at the expenses, you will see that property taxes at $1,034, insurance is at $737. There's zero for utilities, zero for landscaping, and zero for snow removal because these are the tenant's responsibility as per the lease agreement. Now, maintenance and repairs are budgeted at $400. Now let's look at the property management expense. Many of our investors are from out of state and out of the country, so they need a property management firm to take care of their investment. Management fees are $1,200 per year.
All right, George, let me stop you there. Does an investor have to use Cleveland Property Management to manage the properties?
That's a good question, Greg. No, you don't have to use Cleveland Property Management as the property managers. You can use any property management company. You can use a family member or a friend. You don't even have to pay a management fee if you find someone to manage it for you for free. But first, let's continue with the analysis. If you deduct your total expenses from your net rents, you get your net operating income, which is $3,252. If you look at the next slide, translates into a total return of over 10.5% for the first year. An excellent return, all by itself.
But why would an investor want to buy property inside an IRA? Why not just buy it outside the IRA?
It's the same reason as why you would buy stocks, bonds, or any other investment within your IRA. Tax advantages. There's tax-free growth, tax-free compounding, and a set up right, tax-free distribution. Consider this chart. If you were to buy East 73rd Street property that we just discussed, now assuming only a 3% appreciation and a 3% net income increase per year, and you bought it in your IRA, at the end of 10 years, your $42,900 investment will be worth about $95,000. And this is assuming only a 3% appreciation and a 3% net income increase per year. You see, the reason your portfolio value grows so well is that there are no income tax expenses to shrink your returns. Now, if you take a look at the lower part of the slide, it shows the growth if we use a 3% increase in net income and experience a 7% appreciation rate, which, by the way, is the historical average for Cleveland since 1990. As you can see from the chart, your $42,900 investment grows, and after 10 years, it's worth over $121,000.
You know, we have a lot of people that have been listening in today, and again, just so everyone knows, we are speaking with George Fernandez. He's a property investment analyst with the Cleveland Restoration Group. And George, I have quite a few questions here from some of the listeners. I'm guessing you don't mind answering some of these, do you?
No.
Well, here we go. Let's start with Tom from L.A. He asks, aren't there penalties for taking money out of an IRA account?
First of all, we're not suggesting you take money out of your retirement account to buy real estate. What we are suggesting is that you purchase real estate within your retirement account, in which case there would be no taxes or penalties for that investment purchase.
I want to thank you for giving us the opportunity to talk about buying real estate within your IRA or 401ks. I really do hope this was helpful for everyone. Again, you can visit our website for more information on other upcoming seminars, and that website address again is www.resourceforrealestateinvestors.com. We'll see you back here next time. Thank you very much.